let's just take a look at Voyager stock right now. You know, they were at a high of about $27.88 in March of 2021. Now they're at 34 cents. Is there any hope for investors of the stock?
Yes, well, thanks for having me. You know, Voyager right now is too big of a question mark to be investable in our view. We simply don't know many of the details behind the terms of the loans that they've made. There's just not enough of a plan in place that we have seen, at least, that would enable this company to generate enough cash flow to address any sort of loan that they take out. They do have access to a very sizable line of credit, which can see them through, help them to protect the assets that are on the platform. But in terms of valuation, there are simply too many variables that are unknown in order to solve that equation right now.
So yeah, this is obviously a question as to whether or not the shareholders should worry, because Voyager has or had some interesting assets. They, for instance, acquired a company over a year ago, maybe almost 2 years, in France, and they have a brokerage there. They had to and helped acquire for regulation purposes, things like that. So let's say the worst case scenario does happen. Does it have a liquidation value? Like what exactly happens in liquidation?
Well, yes, there are some parts of Voyager that, at least theoretically, could be cleaved off and sold. But in terms of what that liquidation value would be, given the fact that the entire crypto space is under pressure, multiples, valuations are all very much up in the air. And frankly, if you're going to understand liquidation value, you have to understand what your liabilities are first. That's the part of the equation that we really don't know right now. We don't know the extent to which the company is going to draw on its available revolver capacity. It's drawn $75 million so far. There are terms underlying that facility which would potentially enable it to borrow more. Unless we knew exactly how much it was borrowing, it's very difficult to understand what's going to be left over at the end of the day.
Do we know if they're putting themselves out there to be acquired, and if there are any potential suitors who might look at this as a great buying opportunity, and for the company to just quite frankly say, look, this is way too much of a headache for us to handle, but we have some assets here. Do we know of anybody, potentially somebody based in, I don't know, the Virgin Islands, that might be interested?
Well, frankly, what we do know is that the company has retained an advisor to help it review its strategic options at this point. The Voyager brand, the Voyager platform, has been a valuable one. As we saw at the peak, it's got a vibrant community. It has some really interesting parts of that business. I mean, a big part of what Voyager has been offering altcoins, a longer list of altcoins, everything beyond the Bitcoins and Ethereums of the world, than most of its peers. And if you go back to January of 21, this franchise really gained traction after Robinhood had some challenges, as we recall, and there were a number of Robinhood customers that were disenchanted and moved to Voyager. Next thing we knew, Voyager had soaring list of members on its platform, and a big part of that came down to rewards. Now, how was Voyager funding those rewards was largely through its lending activities. Over time, it has actually shifted those over to staking, which we view as a much more stable source of the revenue that would fund a rewards program. Unfortunately, Voyager only got to the point that staking represents a fraction of the cash flows that are supporting its reward program, and here we are.
So we understand that they are owed about $670 million worth of loan payments from Three Arrows Capital. And I suppose what proportion of that is part of their business that is causing them to be, I don't know if they're illiquid right now, and what are the chances of them getting anything back from Three Arrows Capital?
Frankly, that's beyond our ability to analyze at this point. We just don't know what's behind the scenes. I think one of the big lessons of all of this is that these are centralized platforms that we're talking about. Celsius, Voyager, and the like, all of the ones that we're hearing about that are pausing withdrawals and running into challenges. Frankly, we're talking about the crypto space, Web3. A big part of the ethos of Web3 is it's focused on blockchain. It's focused on transparency. And obviously what has been lacking here has been transparency. Ironically, one of the things that Celsius had been working on prior to this episode was something called Z-Audit. It was working with Horizon Labs, which is a protocol which was going to make it possible for any user to see where Celsius's reserves were. Where their liquidity was, where their exposures were in real time or close to it. Obviously, that would have gone a long way toward preventing what we're seeing right now. But I think there's a lesson there, is that if you look across various DeFi platforms, yes, they are having bouts of distress here and there, but for the most part, the lenders in the space, Aave, Compound, et cetera, they're continuing to operate normally. So I think if there is going to be a future for centralized lending of crypto, we're going to have to see all of these players become much more transparent, make the reserves known, their liquidity known, their exposures known, and frankly, take a page out of the book of the DeFi lenders.
So while we're talking about Celsius, what do you think is going to happen with all of these user funds? I mean, there are people saying that they have their life savings locked up in Celsius. Are people going to get their money back? What are some of the scenarios that might play out here?
Again, what we have seen is that, this platform has paused withdrawals. What we don't know, again, is exactly where assets stand on that platform right now. What we have seen is that rewards have continued to be paid out, on this platform. We just have no way of knowing where assets versus liabilities are. Without knowing that, it's impossible to understand, what the capability is of the platform to, be able to address its obligations. Now, this is a moving target because, we have to look then at who are the counterparties, who are the folks who are on the other side of this. And again, that's not yet knowable. So unfortunately, as you mentioned, this is day 18. We just don't have enough information yet to be able to provide that answer.
I mean, just to put this more simply, is there the possibility that these people will just not see their money again?
Again, that would just be speculation. We just don't know. And that's what's very frustrating, I'm sure, for anyone who's involved in this situation. There's just no way of knowing. The closest thing we have to understanding what's going on with a platform like a Celsius is to look at, again, some of the on-chain information that's available. Platforms like Nansen and others that provide analysis so you can understand, where the flows were, which wallets were the various players involved with, so you can trace that back. But even there, that's, just offering clues. It doesn't really offer us the big picture to know those answers.
I wonder if you could speak to
what
the
I mean is that
interdependent.
there's no established protection because there's no FDIC, right, in this scenario. So, I don't know what happens if they file for bankruptcy, but I don't even mean do the funds exist? I just mean if for some reason this just all implodes, do users have any protection in terms of
recourse?
Back? Yeah.
Yeah. Yes. If particularly, if we do see a bankruptcy hearing filing, then yes, there will be the ability to go through this in an organized fashion. As was mentioned, there's been some resistance on that front. But beyond that, it's really up to the individual parties who are harmed to assert their own rights. there are a lot of gray areas, but frankly, the fact that this is a centralized platform makes it somewhat easier. If we were talking about a DAO or a DeFi platform or something along those lines, it's a very gray area. Regulation really hasn't reached into that. But that's another point here, is that it's almost inevitable that we are going to see greater regulation of centralized crypto lending as a result of this. Again, we believe that one of the solutions to these issues is very apparent, which is adopting a much more transparent method, whether that's using blockchain technology, which is part of the ethos of the space, or some other means. Even if you look at CoinFlex's situation, that is one where, notwithstanding what's happening with regard to the exposure they have for the token that they're issuing to potentially build their liquidity so they can address withdrawals. But they also, what was lost there is the fact that they're proposing a much more transparent approach to what they're doing with futures margining. It was really, that was the part of the story that caught my attention, because if lending, futures, transactions involving crypto gain that type of transparency, then the borrowers who have been badly hurt here, the next time around, we won't see those sorts of injuries potentially, simply because the information will be available that this platform's in trouble, we better flee. We just haven't seen that with the centralized platforms ahead of this episode.
Yeah, I just hearing you speak, it just reminds me of the interdependency that has been revealed of all these platforms, from centralized entities up to DeFi. And if you were an investor of something like Voyager or Celsius, and you thought, you were making a more conservative way of earning interest, well, then you would have learned that in the Voyager's case, they had high exposure to Three Arrows Capital, which had high exposure into the Terra Luna ecosystem. And then you would have realized that a lot of this interest was coming down from much more riskier platforms. And I wonder if you could, is that something that needs to be better regulated? And this also goes to the custody argument, not your keys, not your crypto. If you're a user of Voyager, is this just a good time to get your money out?
Well, I can't speak to that. Frankly, as we've seen, we do know that Voyager has ample availability in terms of credit lines that were made available to it. But to your point, with regard to not my keys, not my crypto, I look at something like the recently launched Anchorage network. The notion behind Anchorage, which is one of the most prominent crypto custodians, is that there should be separation between custody of crypto assets and trading of crypto assets. And the Anchorage network is set up to maintain that separation. Frankly, the timing of that launch was pretty apt, given what we have seen. But I believe that going forward, we are going to need to see more transparency, again, whether that's via blockchain or not. We are inevitably going to see more regulation of this space because the remit of the regulators is to protect consumers. Consumers are in a situation like this where consumers are potentially harmed. That is going to draw the attention of regulators. And you are going to see innovative solutions like the one that has been put in place by Anchorage Network that are going to help to address some of these issues.